Welcome to another 144 Analytics video where we give you educational and actionable information using the Fibonacci retracements. We'll start by going over some of the basic rules and guidelines. They're relatively very simple but very effective. We'll start with the 38% rule, and that is that any market that is going to continue the trend should hold 38% of the current move and go on to make a new high. Secondly is the 23.6% rule, and that is that any market that is extremely positive and or negative will not get back more than 23.6%, and again the same thing should go on to make that new high or low from that retracement. Third one is 61.8, and that is whenever you hold that level you should look for 61.8 the other way. That's the general target for it. And then the 78.6% rule, which is a lot like, or is the same as the 61.8 rule, and that is anytime you hit 78.6, you should look for 78.6 the other way. Both of those, the 61.8, 78.6, usually can cause broader swings with less real direction in the trend of the market. We're going to start here on an hourly chart that goes back to the 23rd of May and bring it right up to date. Now, the rally that we had here, you can see from this low on the 23rd, took it up to the 39,800 level, and the setback from there came right back to 38.2%. Perfectly. Held that, goes on to make that new high. That's what we're looking for all the time to keep the trend positive. The next setback comes back to 38.2 exactly again. Now here's a little different scenario. We fail to make that new high. And another thing about 78.6 is it's where a lot of bull runs go to die, and it's also the beginning of or the birth of a lot of bull runs. So you'll see that failing to make a new high, you should be looking for 61.8. That's another part of the rule that once it is violated, that's what we're looking for. So on this failure from here, we were looking for 61.8. Before we did hit that, we also had one rally here at this 4 where it went 38% of the current break here. Again, made that new low, keeping it negative. But then the rally from 61.8, ideally we should have been looking for 61.8 up here. But as always, you're going to watch every retracement just to see how weak or strong that move is. In this case, it happened to go 38% once again onto the new lows. So now as we move forward here, we went down, we failed to get to 78.6%, but of that big move we just had up here. But the rally once again stopped at 38.2% here. Just what we should be looking for is new lows. But again, like I said, where we ended it up on top, the rally at 78.6, here we have the start of the new trend when it failed to make a new low from 38.2%. And again, the beginning of a new move is starting here. So at the 78.6% rule. Now we just as we showed you in the previous one that when you take out 38 and fail to make that new low, your next target is 61.8. That wasn't clearly hit until here on June 2nd, but we came pretty close up here. The setback here really pushed the envelope on trying to say it held 38 back. But either way, our direction still was to look for 61.8 here. Now, from this 61.8, we were looking for 61.8 the other way of where we just came from. But as you can see here, market could only get back and even above 23.6%. We post all these things on our blog, and you can check these. I'm going over this fast, but it's written out and it explained on these charts exactly like I'm doing, but where you can have more time to go over it and truly understand what's being done here. So our target, once we said if it goes through 61.8, we're looking for 78.6. Well, this is what happened here June 3rd overnight. Now, our target from, as we mentioned earlier, 78.6 is the target from here should be 78.6 this way here. But we're going to watch all the retracements on the way down. Now, had it held 38%, would have told us that the market's in really strong position and that they're ready to go for new highs again. They did not. But where did they go? 61.8. Even though our 78.6 was our target, as we said, we're always watching all the retracements. This dip down took it right to here. So now this being 61.8, we'll be looking for 61.8 the other way as our ideal target. Now, the thing you'll also have to watch, just as we said, you're going to watch all the retracements back up. And if this is all they can do, right here, 38.2%, then that brings back telling us we should be looking for new lows. And obviously, we're still looking for that 78.6 target to be fulfilled. And if they do take this level out here, get above the 37.250 level, you're looking for 38.10. And that brings us up to date. Now, what I want you to see is just that with all of that, what we did, all of that was just from, this is the daily chart now on Bitcoin, all that action I just showed you took place between the 23rd, which actually was the over of last weekend, or 2 weekends ago, and this trade right here. All of that action happened right in here. Now, the same rules you use on the short-term levels, the hourly, have to apply to the long-term, or else what you're dealing with isn't true. But it does. So here we go. Just a quick look at this, and you can check it yourself. The low we made in the beginning of the year came right back to 38% to the 2018 low. Then this setback went to 23% to that same low. Then in here, we went 61.8 of this little move in here. But all the time, we're still looking for these higher highs just because we've never taken out 38%. We went back to 61.8% here, 78.6% here, then 38 up to new highs. Okay, now from there, we're still saying this is our long-term swing point, 38. This is the daily chart. So we see it gets hit really hard, comes down to 23%, really trades down through it, but gets back above. So we're thinking, you can still say we should be looking for new highs because it wasn't, 2 solid closes below this level. But the rally could only get 61.8 back right here, and then that took us down to our long-term swing point, saying that any market that's going to continue going higher has to stay above 38%. First bounce from that was a $3,000 move. Nice move, but looks like nothing in here. Then we violated it, and this tells us that the long-term trend now is down until, and we should be looking for 61.8, right? 38% came out, 61.8 is our target. So until they can get through 38% back of this move down, which is up here around the 43.50 level, until that happens, we're still looking for either 61.8 and or then also 78.6 at 18.5 area. So this is key up in here. That's the long-term look at it, and you saw all the action we just showed you within this area happening back and forth. I just hope that this shows you just how relevant and important these Fibonacci levels are all on their own for truly determining what the trend of the market is, and just where you can also get targets from once they've either held or violated them. So I hope you enjoyed this video. Please check out our blog, and you can also find daily updates for free right now on Payrue. That's Payrue, and we have a room there where we will explain all of these same things, plus give you every update during the day that is necessary. So until then, good trading.